The issue of climate change is often quoted as one of the major issues facing the insurance industry. But despite appearing high on many future risks lists, what is the industry doing to influence the agenda, and should it be doing more? My name is Jonathan Swift, the Editor-in-Chief of Post Magazine and Insurance Age, and I'd like to welcome you to this online webinar in conjunction with the Chartered Insurance Institute looking at this emotive issue. Joining me for this discussion, I'd like to welcome Dr. Andrew Dlugalensky, an independent insurance and climate change consultant and also the chair of 3 CII studies on climate change. I'd also like to welcome David Williams, Director of Underwriting and Claims AXA Insurance, and the Chairman of the CII's Underwriting Faculty. And finally, we have Rowan Douglas, CEO Global Analytics at Willis Group, and also Chairman of Willis Research Network. Now, before we start, it's important to drill home the fact that for you, the viewers, to get the most out of this webinar, you should join in. In front of you, on your screen, you will see a red tab, which will allow you to submit a question or a discussion point at any point during the broadcast for the expert panel. So get your thinking caps on and we'll come to your discussion points and questions later in the broadcast. So guys, first of all, I'd like to kind of talk about the point that the chairman of the industry body ClimateWise, John Coomer, has described the global response to climate change as both lethargic and totally out of proportion with the scale of the threats we face. Now, is he being alarmist or does he have a point? Andrew, can I come to you first on that?
I think he is speaking the truth. We've been very lucky recently in the UK and in America from the point of view of bad weather incidents. We had the big floods in 2007, but not much since then. The last very big storms we had in the UK were 1990. So that has tended to make people forget how bad things could be. The EU is very concerned about climate change and is already preparing new work for framework directives. They reckon that by 2020, climate change will be really affecting the EU quite hard, and they need to prepare these directives now to be sure that by 2020 we're ready. So yes, I believe he is speaking the truth.
David?
I agree as well. I think if you go back about 5 years, there seemed to be a flurry of activity. There was a lot of talk about resilient repair and rebuilding, and insurers talking about influencing planning regulations. And I remember the business case seemed to be very, very clear. The Stern report talked about, spend 1% now or 20% in the future. DEFRA talked about getting a return of 8 to 1 for every pound that you spent in terms of flood defences, for instance. So lots of really good things that we should have been doing. But then the recession bit, and I think unfortunately most aspects, certainly when you're talking resilient repair, building in a different manner, thinking more about planning, it costs more. And therefore that combined with it being maybe in the too difficult category for some people has really slowed things up, and I'm quite concerned about that.
And finally, Rowan?
Yes, Jonathan, thank you. I think I'd echo Andrew and David's points. I think at a sort of a macro scale, there were concerns about whether the world as a whole will be able to deal with mitigation. That's the reduction in greenhouse gases. And clearly, at a global level, that political journey is having some difficulty. And coupled with the economic crisis, I think that occluded to some degree the important role that we're going to have to confront regarding adaptation and resilience. I think John was probably right to re-emphasise that and to highlight the role that the insurance industry is going to have in preparing and managing resilience, and also our role perhaps uniquely in being able to price and understand the distribution of risk and extreme events, not just in decades to come, but frankly trying to understand the extreme events that we are witnessing now and are represented through our emerging regulatory frameworks. And so I think that this issue is probably going to come back again and again, and I sense that this year it will come back through a variety of legislative drivers in Europe and the UK that will probably put it on the front burner.
And Rowan, you mentioned the insurance industry response. Obviously, John was talking about the wider, I suppose, kind of industrial community. Do you think the insurance industry has played, to date, a kind of a stronger or a smaller or a bigger role? Is there definitely scope to play a bigger role?
I think this represents an enormous opportunity for our industry, both directly commercially, but also in terms of the perception of our role and importance in society in the UK and around the world. There is a desperate requirement at the moment for resilience. Our industry has just endured perhaps the worst year of insured natural catastrophe losses it ever has, or certainly the equal first. And the market is operating, unlike many other financial markets this year, almost without having missed a heartbeat. That is a remarkable tribute to the sophistication our industry has developed over the last 10 or 15 years, primarily through increased professionalism, increased consumption of science as mediated through the modelled world, which allows us to operate normally. Now, I would suggest that probably on the non-life sector, probably around half our business, certainly over half the reinsurance business, is driven by property-related losses and property-related business. That demand for risk is going to grow. Surely we have a massive role now, as we did in the 19th and first half of the 20th centuries, to help society understand and share risk at local and global scale. So I think we've actually done pretty well in the last few years. And I think with that learning and that increased respect, our industry could actually occupy an even more significant role in the years ahead. David, would you concur with that?
Yeah, absolutely. I worry about the perception. Yes, my perspective is more UK-based, but we have to remember that the Statement of Principles is going to expire in 2013, which means that flood insurance theoretically will be less readily available for people in high-risk areas. So we talk about the commercial opportunity and our role in society, and those two things are, you could argue, in some ways diametrically opposed, because those people that are able to understand risk more and therefore avoid taking the higher risk properties could do very well financially. But as an industry, if that ends up with people being left without cover, I think that's going to be just another thing for the tabloids to be banging on about why insurers are evil. I think we have to make it clear at every opportunity that we as an industry want to make insurance available as widely as possible. But to do that, we've got to understand the risk, and we're getting much better at that as an industry. But also we have got to be talking about mitigating risk, different approaches to repair, to planning, and also, as Rowan started talking about, the concept of risk sharing maybe. I worry that when the Statement of Principles was last up for renewal, everybody said it wasn't going to be renewed, and then suddenly at the last minute it was, and small businesses were bunged in almost as a bonus at the last minute with very little thought. If I was a government officer who'd been involved in that, I might be sitting there thinking, oh well, the insurance industry will roll over again. The world has moved on, our understanding of risk has moved on, and we are seeing the impacts of climate change, which I think makes it a very different scenario, and therefore I don't believe that the Statement of Principles will be renewed, and I think we as an insurance industry need to be standing by our beds to deal with the negative PR, but also need to be pushing ahead of that expiry date to be talking about solutions and options so that we can continue to provide cover for as many people as possible.
And Andrew, as somebody who's an independent, I suppose, kind of independent view here.
I would say could do better would be my report card. In Britain, the UK industry, ABI, has done quite well on flood insurance, alerting the government to that and really talking the right language. I think the other issue, which I've already referred to, storm, is one that I'm quite concerned about. The ABI did a report on storm several years ago, and their estimate of future storm risk was actually much lower than most other people think. And if you look at the scientific literature, again, there's a bit of uncertainty, but a growing feeling that storm risk is probably bigger than was felt. And I do have some concerns about whether, given the amount of downsizing that has been going on and rationalisation in the insurance industry, could we actually cope with another set of storms such as happened in 1990 or in Europe in 1999, which we've just missed. On the global level, I think the insurance industry could definitely do more. Most people in the world do not have insurance against climatic risks. And there's a huge amount more that the insurance industry could do there. And the final bit I would like to say about the insurance industry is that we're not just underwriters. We have our brothers in the life industry and pensions industry who have massive amount of money to invest. And as investors, they could certainly be doing more to influence government policy on things like energy, research and development. So we have done some things, but not enough.
Jonathan, I could just jump in with one other sort of natural hazard risk that people are getting concerned about through climate, probably affecting our cousins in the life insurance world more than non-life, is going to be the incidence of longer, hotter summers and many more frequent summers at the sort of 40-degree centigrade tipping point that we experienced back in 2003. I think there is really some concern over the impact that will have on vulnerable populations, not least the elderly, but also on our infrastructures and our operating systems, whether it's schools or hospitals. So it's often forgotten, but I think actually heat and long hot summers will be something that is higher on the agenda in years to come.
And you talk about the agenda there, and David touched on the statement of principles on a kind of a UK basis. Do you think that's underlined that the UK or the insurance industry per se is good, bad or indifferent at campaigning on climate change and getting its view across with regard to climate change? Perhaps if I come to you first on that, David.
I think we're getting better. I think we're getting a lot better. I think it's difficult for an organisation like the ABI because it has to represent the views of all its members. It only has limited resources, but I think what it's done, including papers on adaptation, which I probably never thought I would see from an organisation like the ABI, they're really good. And I think also having links overseas. So if you go down to Australia, then they've got I think it's got a red book in terms of a manual of how property should be built, and I think contributing to those sort of debates. I think the CII coming on stream as well in terms of very much wanting to influence the thought process and get more involved in lobbying. And even fairly recently there was an event at the House of Commons talking about lobbying, because I think we've got all the data, we've got all the passionate people who really care about these issues, but maybe we haven't known how to link the two together and get the best result, and I think that's what's coming together now.
And Andrew, as somebody who's obviously been charged by the CII to actually look at the climate change issue on 3 different occasions, obviously that shows the engagement of the insurance industry with a climate change consultant expert like yourself. Do you think the insurance industry, your view, is doing a good job with, I suppose, driving the agenda?
Well, I think I've already indicated some of the places where I think more could be done. One of the areas where the insurance industry loses out, if you like, is at the global level, because other industries like the chemical industry, the oil and petrol industry, the oil and gas industry, they have global associations which represent them at climate negotiations, the coal industry as well, for example. There isn't such a thing for the insurance industry, and so its voice is always much weaker in those fora, and I think that is something that could be strengthened. Talking about the CII has done good work in terms of raising the issue, but one thing I would like to see them doing more of is embedding it in the educational material which is presented to the ordinary students, so not the CPD type stuff, but the actual course material, and that would extend to the financial and mortgage lenders who are associated with the CII. I mean, how much is made of the risks to the future householder or house owner of things like climate change, flooding, the price of petrol. These are things which could affect the value of your house if you buy a house in the wrong place. Water scarcity, even.
If I could finally come to you on this, Rowan.
Yes, I think there is a tremendous opportunity for the insurance industry to adopt a solve-with approach with the government in the UK, insofar as the insurance mechanism, whether ultimately operates through the private sector, which I think most in the UK, including the government, are very keen for it to operate through, or indeed, as in many countries, cat insurance is through the public sector. But the insurance mechanism of understanding risk and ensuring that people who prepare to pool their risk behave in certain ways, to certain rules, and obviously then find ways of equitably sharing risk in a way not to encourage bad behaviour, but to protect people genuinely at risk. That is a remarkable invention and will be at the heart of solving this problem. So I think the insurance industry can absolutely be seen as being part of that solution with their expertise particularly at understanding extreme events. It's a fairly rare expertise we have, and how extreme events have to be costed and managed on an annual basis. So I think in the UK, there are a tremendous number of policy streams at the moment, whether it's through financial regulation, obviously through climate change and adaptation. Almost every department of government is having to confront this. And I think if we can begin to inject ourselves within a variety of those streams, I think we could be. I think we could help to shape the outcomes to suit our needs better.
I'd like to support Rowan in that. There was I served on the government's Climate Change Adaptation Committee, and they recently produced their report, or the government produced its report on climate change risk analysis, CCRA it was called, or assessment, sorry, CCRA. One of the things that concerns me, it comes back to exactly to what Rowan is saying, that they tend to average the value of risks to the UK over a period. And so the actual cost to the UK of climate change looks quite small. But when you consider it from the insurance point of view, it's concentrated at a location at a point in time. And so averaged over a period, the flood risk to the UK is relatively manageable. But if you were to talk about Hull in 2007, it was an absolute disaster. You know, so certain parts of the country can be devastated by these events. And I think that's something that policymakers up high sitting in Westminster don't actually realise, that average over the country, fine, but you've got to be ready for the local effects of these impacts.
But do you think, because there are people and there are climate change doubters out there who would say that, you know, at the moment, I don't know, you can look over 100 years, 200 years, etc., these things are just spikes, and that perhaps in another 10, 15 years, you know, we'll go back to being these events being a 1 in 100 year event or 1 in 200 year events, which they have previously been described as?
Well, I mean, two questions there I think you're asking. One, I'm absolutely sure there are climate doubters out there, or climate change doubters, absolutely certain of them, because I've debated with them and read their stuff as well. Is it likely to revert? No, absolutely not. You can go to the internet, actually. You can download data from the Met Office of temperatures for the last 350 years in the UK, and you can see absolutely clearly that the temperatures are becoming higher and higher, faster and faster in the UK. Summers that used to happen maybe only once in 100 years are now coming once every 12 years. Things are speeding up very, very quickly.
There was a phrase I heard once which on this line was sort of, in the battle between the laws of economics and the laws of physics, the laws of physics reign supreme, and ultimately we are increasing CO2 within the atmosphere at a pretty constant rate. In fact, it's growing as consumption grows. That will inevitably lead to, through basic chemistry, a rise in global temperatures. The challenge that we all have to confront is, what impact will that have on weather and events, and where, and over what frequency? And obviously, how does this, if you like, human forcing interact with natural variability? But I think it's becoming, I think for many types of extreme event, there's beginning to be a feeling that even now we are beginning to feel the first effects of that. But the trend appears to be inevitable. The questions are, where and when will these events occur? And that's the real challenge. If I may just come back to the point about the global role of insurance and our global position. And Andrew was talking about the way that insurance is becoming very relevant at a European level on this matter. But just as another example, at the Rio Plus 20 Earth Summit, which will occur in June this year, insurance will play a big role at that meeting. And in fact, the industry will announce its principles for sustainable insurance. I think Nicholas von Bomhart, the chief executive of Munich Re, will announce those principles at the International Insurance Society meeting, which happens at the same time in Rio. And that's really about not just the insurance industry operating in a sustainable manner, but also highlighting its role in delivering and supporting sort of sustainable growth. And then at the G20 summit, which is in Mexico, I think in the same month, the Mexican government have put resilience to natural catastrophe as a key element on the agenda of that G20 meeting, with I think an aspiration that it becomes a standing item at G20 summits. And I think the insurance industry has been invited to begin to provide the inputs to that sort of agenda and that dialogue. So I sense that at a national, regional and European context, or even a global level, these themes are becoming more and more mainstream. And as policymakers look around for the sector that understands this, both scientifically and economically, they come to the insurance world. And I think that's, as I was saying earlier, represents a very exciting opportunity for us to reposition ourselves where we should be relative to perhaps other financial sectors who for the last 20 or 30 years have maybe had the limelight. Maybe it's time for the tortoise to come back and win the race.
If I could perhaps turn to some of the questions we're getting from our viewers out there. This is a question from Andrew Voisey of CPSL, and he asks, shareholders of insurance companies want to know what insurers are doing to respond to climate change risks. He says, what is the top risk and opportunity insurers are highlighting to shareholders as to why climate change is being a strategic priority for boards? Who would like to come to that first? Perhaps come to you, David?
Yeah. I don't think we've ever done a little league table to see what's the top risk, but I think you've got to approach it from all sorts of angles. And when you're talking about shareholders, the corporate social responsibility aspects of a company's strategy are key. And therefore, regardless of the nature of the business, I think, shareholders are looking to see that you're planning and approaching these things appropriately. If you then combine it with the fact that we are actually an industry, a company that deals in these risks, understands in these risks, I think there's a greater responsibility. So I think it's probably mixed. It's a case of showing you're doing the right thing from a CSR, corporate social responsibility point of view, but it's also recognising that you've assessed what's going to happen in the future. You're using data to best advantage, and you have a clear and coherent plan. And I think that's where shareholders will move away, is if there's any uncertainty. If people are saying, well, yes, we're aware of it, we're just considering it. What are you going to do? What are you trying to influence and change in your business? So I think it's a combination of both the almost sort of moral aspects from a CSR, but also the practical things in terms of how much is this going to cost me as a company, and how am I going to deal with it?
So Rowan, do you think it's the case that the insurance industry has to get its house in order first with regard to shareholders and with regard to CSR strategy before it can go out to the wider market?
I think that's important, and I think through initiatives like ClimateWise, which I think are now around 50 UK and international insurers belong to, and other initiatives such as UNEP's FI programme, actually the insurance industry is both getting its own house in order, but also beginning to have that external voice. And obviously, of all industries, it's the insurers who have had to begin to price and understand these risks than most other corporates. But to touch on the investor side, actually it was through ClimateWise that I was lucky enough to attend a meeting just last month in New York of a group called Ceres, which brought together a large number of major US institutional investors, particularly I would say longer term investors such as pension funds from US states. And I can't remember how many trillions of dollars they had under management, but I think collectively it was 20 trillion or something. And it was a meeting specifically looking at climate risk for the investor community, and from two respects really. I think investors making sure they're investing, how can I put it, in an appropriate and sustainable way. But the critical report that came out from that meeting was the risks that investors should be understanding with respect to their own portfolios, and the beginnings of the appropriate methodologies and metrics for fund managers, in this case pension fund managers, to be able to assess the climate risk inherent within their portfolios as they have to do other buckets of risk. Our industry has to do that already, but I think there is a growing recognition amongst the wider investor community that they're going to have to understand at least the climate risk within those portfolios, just as analysts of companies will do. And all it will take over the coming, 3 to 5 years, analysts beginning to ask those questions, methodologies beginning to be developed, and all of a sudden the culture begins to change. And again, I sense that one way or other that could represent an opportunity both for our industry but also the expertise that we can bring to bear to measure these things. So I do think investor sentiment will begin to change.
And Andrew, you already mentioned earlier about the insurance industry as investors themselves and what important role they have to play.
Yeah, just following on from what the other two have said, for some time the Carbon Disclosure Project has gathered information like that from every major company in the world, including insurance companies. So there is already a fair amount of data available that any interested investor can go and look at. And it's interesting actually that some of the very big American insurers have been very poor, and in Italy the Generali insurance company, very poor at revealing what they're doing in these fronts compared to other companies, particularly European ones. One thing I would expect to see though going forward is much more willingness to quantify what's going on. I think Solvency II will help there because people are really going to have to quantify how exposed they are to climatic risks. No one can be 100% sure that they are not going to fall to a series of climatic events. So, you have to specify what your vulnerability is. And on the other side, something which I think I suggested to ClimateWise a while back was that insurance companies should start to be more willing to disclose how much business they are writing in terms of climate-friendly policies and products. For example, how much cover is actually given to wind farms or solar panels or things like that, because it's fair enough to say that we do things like that, but if it's only 0.1% of the business you write, then it's really greenwashing, I would say.
Another question that's come in is from Jim Pittman of Davies, and this I suppose touches on something you mentioned there, David, about the media backlash against insurers and the perception of the evil insurance industry. He asks that most of the public have some involvement with the insurance industry in one way or another. And do the panel believe that the insurance industry could do more to mobilise public opinion and perception to influence government rather than attempt to lobby government themselves? Perhaps I'll start with you on that, David.
I think it has to be a two-pronged approach. I think if we can get the man industry on our side, then it's going to be easier to get the change that we need. I think the problem is that the man industry isn't often interested. I think they just expect cover to be provided, whether it's talking about property risks or other, they're just expected to be there and take it for granted. I think if they understood that the UK was virtually alone in the entire world in terms of the provision of flood cover, then maybe that would bring them on side a little bit more. I think this, you were talking about the chemical industry having a sort of a global voice. Mm-hmm. Well, one of the problems that we have as an industry is that globally there's so many different approaches. If you just go across the channel, it's not far. You don't buy a policy which includes flood cover. They have CatNat, they have public funds that provide it, and therefore I think what we need to do is we absolutely need to get the man industry on our side. But we need to be pushing government as well. That said, the session I mentioned previously about learning how to lobby government more, basically MPs will pay attention if they think it will make their constituents think they're doing the right thing. And therefore, frankly, if we don't convince the general public that what we want is the right thing, then why should we expect MPs to sign up for it? They're meant to be representing their constituencies. So what we need to do is we need a bit of a PR campaign. I think there's tremendous benefit that our experts can bring. You know, if you're in a high-risk flood area and you want some information about what you can do to mitigate the risk, then frankly an insurance company is a really good place to start in terms of getting that information. So we need to get them on board, but we do need to be lobbying government heavily as well.
Rowan, would you agree with a two-pronged approach?
Yes, but I think we've got to just re-articulate what our industry does and what it is. This idea that our industry is somehow separate from the population is the first fundamental misnomer. Insurance is the ultimate community product. We represent millions of people in this country who can share risk one of two ways. They can do it through taxation, or they can do it through insurance, or hybrids of those two things. So the critical thing is to reconnect ourselves with the public and say, our money is your money, and what do we collectively think is a fair and sustainable and appropriate way of sharing risk? You know, specifically perhaps within flood zones. But then I'm always fascinated when there's a major catastrophe around the world, and you explain to folks that, broadly speaking, and I'm using very round numbers, around about 10% of the premiums that we all spend on our homes and cars ultimately are ceded to reinsurers to go into a global $200 billion per year pot, which is there to support people, whether it be in Thailand or in Sheffield or in Hull, when disasters occur. And that is a remarkable global community product. It's the essence of a civilized society. But we don't, and when you explain that as well as giving to charity, which is a good thing, simply being part of a global insurance and reinsurance system also fulfills certain functions in the same vein, I think people begin to look at our sector and their insurance policy perhaps in a slightly different way. And we've got to reconnect with our clients and with our other stakeholders. And I would sense that this particular issue around climate and extremes is probably one very good theme that enables us to do that in a tangible and accessible way.
Andrew?
I think I'm slightly wary about insurance companies trying to mobilise the public. It's, you know, that isn't what we're set up to do. And you can't actually vote for flood defences at the moment anyway. Maybe you will be able to in future. But I certainly think there's something to be said for educating the public to make sure they understand the issues and will be supportive of measures. For example, a point that David has referred to several times is resilient repairs or resilient preparation. And at the moment, there's nothing that says that property in certain designated areas must be repaired to a higher standard than elsewhere. And what that means is it never does get repaired to that higher standard because it costs more. And so the damage will recur, things will become uninsurable, and we'll go into a downward spiral. So it's actually in everyone's interest to see, in some areas, regulations coming in to improve things. Similarly, pensioners and their trustees are very badly informed, I think, about climate change. And they could be a real force in pushing the investment world forward. But at the moment, there's very little action there.
And talking about investors, another question from one of the viewers out there, it's just Kathy Taylor of Ecclesiastical Insurance. She asks, are investors actually concerned about climate risks, or do you sense that it's about the wider responsibility, human rights, poverty, etc.? And is this an area which is becoming more important for many customers, i.e. the people buying their insurance? I can start that. Let's start with you on that, Andrew.
No, I think investors are. There are initiatives for investors on climate change. Investors definitely are interested in this area and want to see action. Up till recently, still in fact I would say, the interest has been on the carbon emissions side rather than adaptation. But they are definitely interested in what governments are going to do about climate change because it affects the whole economy. You know, the energy is basically the answer to the whole problem. How are we going to get energy and use it? And that's fundamental to the economy.
David?
I think the reason we perhaps have this perception that they're interested in the broader CSR stuff is that it's just easier to bundle it together. I also think you have to look at the way investment decisions are made, and it's rare for that amount of digging into what's making a business tick to go on. So I think in terms of company reports specifically talk about corporate social responsibility at this point in time, and they will touch on climate change within that. I think what's needed is a specific dedicated response to climate change in all company reports. I think if that happens, then that information is going to be freely available for investors to be able to compare. I think currently they can't. They're given advice. Advice tends to focus on the broader CSR, and therefore they'll make decisions based on broader CSR. And there might be a feeling that if somebody, if an organisation is thinking about corporate social responsibility, then inherently within that they will be thinking about climate change. But I think a separate section, how you're going to be dealing with the risks from climate change, how you're going to be responding to it, I think that will help greatly.
Thought any, Rowan?
Yes, the CSR aspect, which to some degree has been convolved, isn't going to go away. That's as much about companies being concerned about their reputation and the need for good housekeeping, of which obviously their carbon emissions, for example, is a component. But I would put that to some degree aside. I probably have a slightly different emphasis to David's. I think that the focus on climate change specifically can sometimes obscure the primary concern. The primary concern that's, I think, deepening for corporates and specifically for insurers as a solution to that is resilience to extreme events and corporate resilience generally, of which obviously resilience to extreme weather events, either directly or through indirectly, perhaps through supply chain risks or whatever it is critical. Certainly what I would love to see is a heightened focus within corporate reporting around resilience and risk, and as a key element of that, resilience to extreme, if you like, climate risks. Not just thinking about the medium to long-term future, which obviously for some sectors, not least infrastructure or other longer-term sectors, is critical, but understanding resilience to extremes that are likely now in terms of distribution and frequency. I think that would provide absolutely the right sort of refocusing of good corporate management that would obviously help our sector.
Could I just come back on that a bit? I'd just like to really repeat that the Carbon Disclosure Project does a lot of work in this area globally and in the UK. It's primarily focused on emissions, but there are sections of the questionnaire which could certainly be amplified, as Rowan has indicated, or in the way that Rowan has indicated. But one of the findings from that survey, which has now been going for many years, almost 10 years I think, is that big companies do pretty well on it. But if you go from the FT100 to the FT350, in other words, the next 250 companies, which are still big companies in the UK, there's a much worse awareness and capacity to deal with the issue of climate change. So you can see a big drop between the biggest 100 and the next 250, and you can imagine what happens when you go below that level. So I think investors do need to see companies stepping up the game.
If we kind of move out of the UK, there's a question here from Christopher Lewis at Sagicor at Lloyds, and he asks what the speakers think about the viability of microinsurance as a tool to ensure the most vulnerable populations are protected from the risks of climate change, and what other mechanisms can be utilised to supplement this. Perhaps I'll come to you with that first, Rowan.
Yes, there have been some very promising pilots of microinsurance schemes around the world in some of the most challenging regions, not least the Horn of Africa and elsewhere. And it's an area of considerable interest, not just for elements of the insurance industry, but for some of the major donors as well, whether they be charities or government departments. I think there's two challenges that we still struggle to overcome in this area. The first is simply scaling up these projects, which may well already deal in the tens of thousands, and I'm thinking of one example in Ethiopia, but to generate true true scalability, perhaps through the use of modern communications, mobile phones, whatever, to increase distribution. I don't think we're quite there yet. And the second one is actually developing the right products. And there's been considerable excitement on the opportunities for index-based products or other sort of parametric instruments which have the value of simplicity. But then, of course, you have the problem of indemnity and risk that those at risk, the farmer or the householder, for whatever reason, may not actually receive payment when claims occur. So it's an area that we really have to seek to encourage and develop, but not also be blinded to perhaps some of the inherent challenges that we face in this area.
Andrew?
Yeah, I think it's an area with great promise. One of the problems with developing it, I think, is that in reality, one of the reasons why insurance has done quite well is there are people called intermediaries that make money out of it. So it's in their strong interest to develop the market because they get money for selling these products to people. Now, microinsurance, it tends to be in areas where agents just can't make a lot of money. And so that's a major barrier to progress. And we need to get round that by somehow linking it with other things like microfinance to make the thing work. Because traditional ways of selling insurance just won't work. There isn't enough money in it for the intermediary. But I think there's huge promise, and there's also developments on the level of governments. I'm carrying out a review for the UK government of something called the Caribbean Catastrophic Risk Insurance Facility, CCRIF, or CRIF. And that basically insures governments in the Caribbean against risks like earthquake and hurricanes and soon, hopefully, floods. So that kind of idea, you pool countries together, it reduces the variability of the risk and reduces the premium. Those are also possibilities that we could be looking at in the future.
Yeah. If I can perhaps move back onto the subject of the floods and flood insurance, there's a question here from Greg Sinden of Amlin, and he asks, there are potential insurance solutions for flood, including one proposed by Marsh and Guy Carpenter under the name of Project Noah. Now he asks, are these kind of schemes administered? Well, basically, are there challenges that people feel from broker-led flood pool? What would it experience? Because a broker-led flood pool, would that experience some problems? Perhaps I'll come to you first on that, David.
Yeah, I think it's good that the insurance industry is discussing all sorts of options, and I've seen some of the Marsh proposals, and I think they're interesting. It's a difficult one because, as I've already said, the insurance industry wants to provide cover for as many people as it possibly can. But when you start talking about pools for specific segments, rather than something like terrorism where you have a pool for the entire country, there's the issue of, one, getting the capacity that you need at the right price, and two, getting enough into the pool. My view is that things have gone a little bit quiet on Project Noah. Lots of really positive comments in the early days. I'm not surprised though, because a conversation we had before this started, there are people out there that think that the statement of principles will just roll over. And why is anybody going to commit to a different solution if that view's out there? I mean, I think there needs to be a new solution. I don't think the statement of principles will roll over. I think a pool, whether it's broker-led, community-led, I wonder whether, in fact, when we're talking about microinsurance in the needs of emerging countries, maybe there's some lessons we can get there in terms of just taking a different approach, thinking outside the box. But I think it's something that needs consideration. But I don't think anybody has come up at this point with a solution that's better than the one that we've currently got. And if I was the government, I can understand why I would be hoping that exactly the same happens this time as the last time when the Statement of Principles was up for renewal, and it does just tick over, because currently people in the UK, businesses in the UK, you get a really, really good deal on flood insurance.
So Rowan, do you think a broker-led kind of flood pool solution could work?
I think it could work, a broker-led solution. I think brokers have a very strong role to play in helping to solve these sorts of problems. That's what we're there for. And I would hope that whether it was a broker-led solution or a solution coming from other quarters, or probably ultimately a blend of a variety of solutions, that we kind of get away from, I think, some of the lazy thinking about different sorts of institutions or sectors of our industry having, if you like, a certain axe to grind. I think that actually we'd be far better, looking at the strength and the quality of the idea, obviously being cognizant as to how things then will operate in an appropriate manner. But I would encourage any organisation or group of organisations who feel they have a good solution to offer to come forward and bring it into the open, because we do need to confront this issue and others. So I would hope that a broker-led solution could work as solutions coming from the insurers or even other organisations.
And Andrew, what was your insight?
I think there's a couple of points I'd like to throw into the pot here. One is that we had an exactly similar risk in the UK, which we still insure, called Subsidence. Now, that's a very highly location-specific risk, just like flood. And yet, somehow or other, we have dealt with that, and the market is rolling on, and you don't hear people protesting about the problems they have with subsidence cover at the moment, anyway. So somehow or other, we got around that. We covered it. There are high-risk operators offering insurance against that risk. So I think we should try to learn from that. The other thing I would like to throw in here is that I think with the recession, people are becoming poorer. And I was involved in a study in Scotland of insurance, in fact, climate change, including insurance. And already we can see the proportion of people buying insurance is dropping, particularly in the lower income segments. And I would like to see more being done by the government and the insurance industry to see what's happening for the poorest people in society that I think will not have insurance and will be the ones that will suffer when the events happen.
It's interesting you mentioned there about the products that people buy and the consumers, because there's a question from Kirsten Aitken of the Big Partnership, and she asks about whether you think greener insurers will rise in popularity as the climate change debate progresses. Do you think insurers should widen their range of coverage for these consumers, i.e. electric cars? Perhaps David, I'll come to you on
that. I think it will. I think it's inevitable. But I don't think it's going to be as quick as it needs to be. And the problem is, any market's all about supply and demand, isn't there? So if the demand isn't there, then people are going to launch less products. I say launch less products specifically because I think every major insurer and a number of brokers have in their offices a lot of detail about things that could be done. Simple things like, if you talk about public utilities clauses that are already on the stocks, just amending those slightly so that repair and rebuild can be in a more resilient and more climate-friendly manner. It's an additional cost, but it can build in. That's exactly what those clauses already do. But I think the problem is, whilst everybody's talking about them, there are very few that are actually going to market. And those that do go to market, they get a nice bit of publicity, but they don't necessarily sell the units. I think it will happen. I think, strangely, things like solar panels being on people's roofs, that's not being driven by climate change, really. It's being driven by the fact that people are being told they can make money from the government by having solar panels. But it does get that debate going, get people thinking about it. And, again, conversations about coverage for claims arising from wind turbines, solar panels, heat pumps, things like that. That will, I think, gradually push things up the agenda.
And Andrew, you mentioned about the fact that these people in Scotland, obviously, they are cash-strapped. Do you think they will have any money to buy a greener insurance policy? I suppose they're paying a premium for perhaps it being a bit greener.
Well, I think that's where regulation will certainly help, because there always will be the temptation to go down market. One of the things I'm rather sad about is that, forget Scotland for the moment, one of the things I'm rather sad about is that the mileage policy idea hasn't really taken off, because that was, to me, a great product, because it linked risk, the driver behaviour, if you like, with climate change, conservation of energy. And it looks like at the moment that's hit a bit of a stumbling block. I'd like to see that progressing, and it may be that with further developments in IT, we will see that getting stronger in future, which would be a real good green product.
You see, I think that will take off. I think we all know about big telematics launches a few years ago which failed. I think one of the problems was where technology was and the cost of the little black box and things like that. I think the complication now, strangely, is less about technology and is more about influencing driver behaviour and being able to price in a way which does influence driver behaviour, but also having some form of interaction so that somebody knows they're either driving in a better manner and it's going to cost them less. But if you think the technologies that in a little phone these days, I think it's moved on so much, and I also think it's a strange sort of tangent almost, but if you look at things like the Tester-Schatz case, which has meant that we can't underwrite based on gender anymore, well, underwriting on climate-friendly driving behaviours suddenly becomes much more attractive. So I think the next couple of years we'll see some big initiatives there.
We've also got plenty of questions. I'd like to thank you all the viewers for putting these forward. And this question goes back to the issue of microinsurance. So perhaps I'll come to you on this, Rowan. There's a question here from Roland Steinman from the Microinsurance Centre, and he asks, is microinsurance against natural catastrophes really what people in highly exposed countries need? And says, e.g., a flood in Pakistan last year, what difference would insurance in the village dwellers would have had? What difference would it have made for them?
Sorry, if they had insurance.
If they had microinsurance in a Pakistan village that was impacted by floods, would it have actually made any change and impact? So is that really what they need?
Well, it would have, depending on obviously the policy conditions, it would have given them some money, and money at a critical moment in time, which could have I'm sure, dealt with some of their immediate concerns, but and the whole purpose of, in this case, resilience to shocks and livelihoods, it may have given them enough money to sort of restock and reload once the floods had receded. Doesn't deal, of course, with the much more fundamental issue about how likely are those floods to occur again in that place. Should they still be there? Should they, consider moving somewhere else? Would the money coming from the insurance help to do that? I doubt, frankly, if it's a microinsurance policy, whether the sums we're talking about are enough for that sort of lifestyle change, and it might require another sort of insurance or reinsurance mechanism, perhaps operating at a municipality or even a national level for a country such as Pakistan to help with some of those issues. But I certainly don't think that an active microinsurance policy would have done said farmer in Pakistan any harm. I think it may have done them given them some help.
I agree. I think it would have been immensely beneficial. I mean, very often after these events, people go into permanent debt. Suicides are rife because they can't get the money to repay the moneylender for the crops that have been destroyed. And it's getting to be the situation that even in some cases loans will not be available unless the farmer has got insurance.
Another question, this is from Caroline Woolley of Mars, and she talks about the whole campaign as well as the climate change campaign. She asks, one way she thinks would actually help promote this is to include resilient repairs and other clauses to allow reinstatement in an environmentally friendly way. And she asks, well, obviously this increases the claims costs, so they've seen a reluctance for people to do this. And she asks, will insurers support these now? I suppose I should come to you on that first, David, as the insurer representative here.
Absolutely, and I think I've already hinted that we have the wordings ready and available. It's just a case of we're in a competitive market, we're in a recession. Rates aren't going up, and therefore they're less appealing to the man in the street. It's a terrible thing to say, but I don't think it's right for the insurance industry to impose better standards of repair. If regulations, local authority planning regulations required rebuilding in a different manner, then the insurance industry as a whole would respond. But the problem is, not everybody wants the best policy wording. Not everybody wants to pay now. You've got to bear in mind that one of the big problems is only sort of 10 to 15% of people actually submit a claim in any 1 year. And you speak to most people, they never think something's going to happen to them. And that's why, you know, they're resistant to buying some of the covers that they already need. So you've got that position, then you add on top something which, you know, is very much going to be for their benefit, but in, you know, circumstances which they already don't think are going to happen to them, to ask them to then pay more. The reality is they'll probably go down the road and buy a cheaper budget policy. And I also think if you look at the trends in the insurance market currently, we've seen what's happened in terms of personal lines with, you know, cost comparison sites. Certainly e-traded business at the smaller end is going to grow in the UK. And, you know, most businesses in the UK are SMEs. And what's tending to happen is, because of the new ways of purchasing, because of this focus on price, quite basic covers are being launched with add-ons, which I think is a shame in some ways, because we can be proud of, you know, the commercial combined, the package policies that we've issued in the past, including all sorts of covers, subsidence, things like that, so that people get it as standard. But the move, partly by technology, partly by the way things are traded, and partly by the recession, unfortunately, is moving towards more stripped-back covers.
Would you agree with that, Andrew?
Yeah, I would. And I think one thing that may help is regulation. The other thing that might help actually is if we do have the situation arising where flood risk is properly assessed and charged, then that could be the situation in which insurers could say, yes, we're going to insure you, it will cost you more, and your policy will include these clauses, because we don't want to be in the situation later on of refusing to cover you because we think the property is uninsurable. We want, when it's repaired, to be repaired to a standard that we can continue to insure it. And I think that would be a very honourable and sensible position to be in.
I've got just about time for one final question. This question comes from Peter Bowden of Catlin. He asks, do the panel think that the political risks aligned to climate change, i.e. water and fertile land scarcity leading to upheaval in certain countries, are being eclipsed by the focus on the increase in weather catastrophes? Andrew, should I come to you on that first?
I think they've been put aside at the moment, but I think there are some far-sighted politicians, and they are aware that these problems are brewing beneath the surface. And so I think they are one of the reasons why areas, and particularly the EU, I would say, are very strongly wanting to push forward on climate change policy. They're aware that Africa is a continent very close to us, very, very vulnerable, and unless we get Africa prepared for climate change, Europe will actually suffer from that.
David?
It's a difficult one. I can see where the question's coming from, because it is the huge climactic disasters that make the news headlines, and those tend to be the ones that are particularly impacting the more advanced nations. But I do think there is an understanding of the problems with Africa particularly, and I think it's on the agenda. It's not being forgotten about, but people are just focusing on the things that maybe make the better news stories.
And finally, Rowan.
Yes, well, clearly the events have a very direct financial impact on not least insurers and reinsurers. But as Andrew said and David hinted, this is all part of the perfect storm of the kind of 21st century around energy, population growth, climate, and the combined effects of all those on agriculture and food production. It's becoming an important aspect within government policy and public policy in the UK and around the world. I think it just touches that we've had, perhaps the 10-year overture of the 21st century symphony. Had a very extreme range of extremes in the last 10 years. The fundamentals indicate that while we may now go into a quiet mode, maybe for a few years in this of the first movement of this symphony, the whole world is reaching new equilibria, whether it's around climate, whether it's around energy, and until it finds new equilibria, there will be shocks, there will be extreme events. And the questioner from Catlin is absolutely right. The interesting question, I suppose, for our industry is what role we can play, either directly through policies or indirectly through our sort of influence and advice, to help shape appropriate responses and, to use that word again, resilience to these changes. So thank you. That's
yeah. Well, unfortunately, we've run out of time there. I'd like to thank our esteemed panel again. I'd like to thank Andrew, David and Rowan. I'd also like to thank you all for your insightful questions and our sponsors, the Chartered Insurance Institute, with whom we've held this webinar in conjunction. Just remember, if you want to keep abreast of all these climate change issues, you can log on at www.postonline.co.uk. We have recently run a series of articles in conjunction with the CI on this, and in 2 weeks' time we'll also be running a roundtable on this very subject. But anyway, that's enough for me for now. Thank you all for watching. I'll see you again next time.